G'day everyone, welcome back to Pete's Investing. Today is June the 5th, 2023. This is the NIKKEI Japanese market update. Got the weekly, daily and the hourly. They're all showing bullish momentum, so predominantly bullish trades only. Let's look at each of these in detail. We've got the triple moving average of the price chart is in line with the CCI 150 moving averages, and it's giving us a bullish signal. But again, just be mindful, it's quite a steep rise, and these usually pull back at some point. So just keep an eye on that very closely. On the daily, likewise, it's in a bullish momentum, but notice here we've got a divergence on the CCI. Now we did draw this divergence between those tops there on the CCI and those tops on the price chart, but you'll notice this is still in play. Now we initially had it going short from there. It actually bounced down from there initially, and that may have been a potential play, but then it bounced up from there and it didn't. The wick maybe just hit our target, but I'm still confident this is going to break down at some point and hit these targets. So what I'm going to do is remove that Fibonacci to redraw these divergence. So I'm going to move that divergence down. Remember, as long as the divergence on the CCI declines and the divergence on the price chart keeps rising, then that's still in play. So I'm going to raise that, so you can see there the divergence is still bearish here and still bullish on the price chart, so that's still valid. So what it means now is we're going to pull the Fibonacci's back to let's move the redraw the Fibonacci's from that recent low. It doesn't really matter which low you go to, so let's pick that one there to the most recent high. So let's assuming the price comes down from there, then our price target is going to move, let's move that to there, in line with that 23% retracement. So if the price breaks below that channel, we're going to move our initial target there, and our secondary target will be between the 38% to the 50% level. So that's a secondary target. So I'm not saying it's going to turn tomorrow, but if it does turn tomorrow, that's where we're going to have initial target potential like we did back here. So what I'm basically saying is the divergence is still playing out. It hasn't failed. So long as that keeps declining and that keeps rising, we're going to keep this divergence going to see how it performs. But at the moment, you'll notice our main indicator here is still showing a bullish signal. On the hourly chart, likewise, our indicator is showing a bullish signal, so predominantly long trades. And you'll notice if I zoom out, I've got a short back test in red here and a long back test in blue. And you can see there with the price accelerating, that's how the averaging down is adding to the positions, and the profitability is dropping off on the short side, but on the long side it's continuing to go up. And a way to avoid those drawdowns, you would notice there was a drawdown here when the price is declining. There was a drawdown on the bullish back test. The way to avoid those is, again, looking back here during late 21. So during that period, there is no bullish signal on the weekly chart, so you would have avoided going long in that period. Likewise now, there are no short signals on the weekly chart. Likewise, there's only long signals on the daily as well. So no short signals weekly, no short signals on the daily, so you would have avoided going short in that period as well, only long periods. So again, that's how you trade with the weekly and moving and daily indicators aligning with the hourly. So to understand this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also answer any Patreon subscriber questions. We also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.